Well, today we had some, let's say, good news and bad news, like we usually do on a daily basis. The good news is more people lost their jobs and there aren't as many job openings. You might say, Dan, isn't that bad news? Well, it's kind of bad news, but it's good news if you're out there trying to buy your first house. Why? Well, because if there's less people working, you're going to have less inflation. This is based on the Federal Reserve, and rates are going to go down. Look what happened yesterday. Okay, so rates went down 0.06. They're going to continue that rate drive down here today as well. So let's jump into the data that we have. So the first thing we want to go over is right through here. Job openings fell again in April to its lowest levels since 2021. Let's take a deep dive into this. So here's the calendar I use. I used to use Bloomberg, but I subscribe to this system. If you guys want to subscribe, MBS Live, if you're a mortgage advisor, highly suggest you get it. I'll have a description down below. But here's the data that came in today. Basically, it says the jolt. How many job openings are there? Okay, there's 8 million job openings. Okay, so that might seem that's a lot of job openings. But let's look at where we were. Okay, previously we were at 8.4 million job openings. It was revised to 8.3, came in at 8. Okay, so this might even get revised down. So I wouldn't take off the table if this went to 7.9. Okay, so but here's the other piece that was kind of shocking to me. Jolt job quits. So what is that? Well, basically what the Jolt job quits is, tells us how many job openings there are. That's the Jolt index. How many workers were hired and how many quit their jobs. How many quit their jobs? 3.5 million people quit their jobs. So people are quitting their jobs, but there's not as many job openings. So that might be a concern right through there. Then the rest of this is really not anything to really write home about today. So let's get over to also inventory. We see a lot of people saying, okay, the markets, there's getting tons and tons and tons of homes coming to the market. So that's going to create a glut, which is then in turn going to cause mortgage or home prices to drop. Okay, the number of homes, U.S. sales for sale slowed, returning to normal. So let's go into the number of houses in inventory right through here. This is inventory, and this is from Trend Economics. So you can pull up data. This is data I think it comes from actually the Fed as well. Here's how many houses we have in inventory. So for those out there saying we don't have an inventory shortage, well, we kind of do. Okay, especially when you have millions and millions of people coming in here each year and need housing, okay, from immigration, illegal immigration, and so forth. So the housing inventory is dismal at this time. Okay, so that tells you there's not a lot of houses for sale. So there aren't going to be people just giving away their homes because they don't have to compete in this market if they don't really have anybody to compete against. Okay, so that's that piece of it. But here's some data I also want to provide you guys. So my goal here and my job, I look at my job, is to inform you everything real estate. Okay, so in regards to real estate, homes, prices, mortgage products, and everything else, I want to kind of give you the truth behind things because there's so many people out there that just give you the BS of everything. They give you the data that they know that you're going to click on. Okay, like the housing market's going to crash. We heard that narrative for 3 or 4 years now. So let's dive into the numbers a little bit more in detail because a lot of people keep asking me, Dan, should I buy in this market? I'm afraid it's going to crash. And I've been saying, well, did it crash last year? Did it crash the year before? Did it crash the year before? Okay, if you're in markets such as Austin in those areas, maybe you wait, okay? But if you're in other parts of the country that really didn't see huge, robust appreciation, and even, unfortunately, you're going to have to make that decision yourself. But my goal here is to at least give you the factual information for you to make your own decision, okay? So here's the housing data that we have. Total residential properties, 110 million. Average home age, 48. Total 2024 residential sales, 1.19 million. Okay, so this is a dismal number. Look where we were last year. And you got to remember, we're in June now. Okay, so we're less than 2 million sales. Where were we last year? How many houses sold? 4.2 million. This could be the worst year ever for housing sales. Okay, property taxes, total commercial, let's go down through here. Number of homes seriously underwater, less than 1%. You keep hearing, oh, all these people are going to go into foreclosure and all this other things. You have 117,000 properties in foreclosure throughout the entire country. Okay, that's a very small percentage. And then you have percentage of equity rich people or rich homes. What is that? So you go over here, over 46% of residential people are equity rich, meaning their outstanding loan balance is less than half the home's value. Okay, so there's a lot of people out there. Almost half of the people in the whole country own their houses and they owe less than half of what the house is worth. So that should give you a little bit of relief saying, okay, there's not going to be a whole glut of foreclosures coming to the market. That's not going to, ramp up supplies to the point we saw in 2008 that kind of crushed the market. We don't have the inventory and the sales aren't there as well. So unless you really see sales picking up considerably, or you have just a whole bunch of people dumping their homes for sale, but there's really no reason why they should dump their house, especially when you have this. You have about half the people in the country are equity rich when it comes to their home. So that hopefully gives you a little peace of mind where home prices are going. And then let's go back to the data that we have. We have this data coming in saying the country or the jobs reports are getting a little bit cracky here. So that means that mortgage rates should start getting better because the Federal Reserve is going to monitor this stuff. So what we want to look at now is what the heck's going on with mortgage rates. So what we do and how we figure that out is we go to the mortgage bonds. Why would we use anything else? So the mortgage bonds are telling us right now that the price of the bond is up 5 ticks. Is that 5 ticks? Yes, 5 ticks. That means mortgage rates are basically just going to stay steady. Look at these little numbers or little lines that we have through here. Okay, right when this JOLT index was posted, you can see that white line right over there that takes a big move up to this line here. As soon as the JOLT index came out, the markets overreacted, and the MBS market went basically from 0 to up 17. Okay, so then people started digesting the data and saying, okay, well, that's a little over exuberant, and the markets came right back down. So right now we're seeing mortgage rates flat, no really changes right there, but it was good news, actually good news, that more and more people quit their job and there isn't as many job openings out there. Never thought I'd be saying that. So then let's get over to this thing. Now, if you're trying to figure out what is your market look like, what is your home, your price, the price of your home looking like, well, do me a favor. Use this system. Okay, it's also Altos Research. All they do is have residential information for you. So you go to altosresearch.com and you're going to go over to products. Then you're going to go to market reports. Okay, you're going to plug that in, and then you're going to scroll down here and it says run a report. Well, what do I want to run a report for? Well, I live in let's say I live here. Hobe Sound, Florida. Don't know where that is. Don't know anything about it. This is telling us it's slightly a seller's advantage, and it gives you a ton of data right over to the side here about that housing market. Median house price. That's what's going on. It was down. Look at this is way down from where it was. Price decreases 34%. Price increases 3%. Inventory. And then you can go down through here and see. You can basically dig in onto this property, see what's going on with prices, what your competition is, and the range of prices, home prices you're looking in. So let's say, for example, you're in a $464,000 market. You have right through here one house that just came on the market and 2 were absorbed. So that means there's really not a lot of inventory there. You can see days on market right in this range from 640. It's less than 30, or it's 30 days. 464 has about a 60-day on the market. Not really sure why, because there's just not a lot of inventory. You have 1 coming in the market and 2 ready to sell. So you got people basically standing in the wings waiting to buy these homes as they come due. So that's my report for this morning. I hope you find value in it, because my goal here is to provide you the truth. Okay, guys, what's going on in the economy? I give you the data, I give you the links and everything else. What's going on with home prices? I don't know. Every area is different. You need to do your research on where you live. Who cares where everybody else lives? Okay, so do your research with Altos Research, and then when you get ready to buy that first house, or maybe buy your second house, or any other investment property or something like that, reach out to us. I'd love to help. My name is Dan Frio. I'm actually a mortgage advisor, mortgage loan officer, I'll put it that way, licensed in all 50 states as well as Puerto Rico. I'm one of the country's largest mortgage brokers. Still at this time, we're set up with over 35 different lenders to help you guys navigate this market. So what people do most of the time is when they're looking for a mortgage, everybody tells you need to get 3, 5, 10, 20 quotes. Well, that was old days. Okay, now let's use technology to our advantage. Go to the rateupdate.com. Here's where it's going to bring you. What I want you to do, the first thing is before you even start anything else and you've decided you want to buy your first house, first thing is hit the grant finder right there. Don't do anything else. Hit the grant finder. Answer these few questions. It's going to take you probably about 3 minutes to come through this, and it's going to tell you, do you qualify for grants up to $7,500? And the reason why we like these grants is because they're forgivable. You don't need to pay them back. Okay, kind of like those student loan payments. Okay, so you don't need to pay those back. But if you'd like to find out more about me and my team, or put in an application, because I always ask people, don't disqualify yourself. Okay, so you can click the apply now button right through there. You're off on your way, or scroll down right through here. And if you prefer to call us or email me directly, you can do that right here. Give us a call at 844-775-5626, or email me directly. Yes, it's me at dan@therateupdate.com. Thanks so much for watching, guys. I'll give you a midday report here shortly to let you know where the markets are standing at that time.